Hello and welcome to the Telegraph Studio and Business Reporter's Fighting Fraud campaign, hosted by the Telegraph Online. I'm Alistair Greener. Home and car insurance experts know that fraudulent data is laying a heavier and heavier burden on their business. Can the industry take control of this ever-growing problem? How can we spot fraud in time? Well, this is what we're going to discuss today with Adrian Coupland from SSP. Good morning.
Good morning.
So when is a fraud typically detected?
That is really the problem. Certainly from an insurance application perspective, insurance fraud during the application process is quite often not detected based on the way that insurance companies and intermediaries distribute their products and services into the market.
So let's look at the fraudster. What's typically motivating them? What are they out to do?
So to be clear, there are really two categories. There's the deliberate fraudster and then somebody who's accidentally doing a bit of application error, which could be classed as application fraud, but it really isn't. So the deliberate fraudster, they're trying to save money fundamentally. They've worked out that by changing parts of their application data, whether it be their age or their driving history, their conviction history, they can save a significant amount of money on their car or home insurance, which is quite different to the genuine buyer who may be shopping through different channels and may change the response to a question based on the fact that they've got a little bit more knowledge from point one to point two. So a good example of that would be somebody going to get a car insurance quotation. The service that they may be using may have a vehicle validation and vehicle value service, which tells them exactly what their car's worth. So they'll use that as the value when they do their insurance application. They may then go and use a different channel that doesn't offer the guidance to tell them how much their car's actually worth. So that you could see two different vehicle values during one insurance application, but that doesn't mean fraud.
So let's look at this fraud, whether it's deliberate or accidental. How big of a problem is it for insurance companies and, for that matter, for the industry as a whole?
So based on the data that we see and the analysis we've done, we see something in the order of 10 to 12% that we would class as deliberate fraudulent activity, where the consumer is changing things like their occupation, where they live, their conviction history or their driving history in terms of accident. Those sorts of things you don't really get wrong. You know your occupation, you know where you live. So that's a pretty fair indication where somebody is deliberately trying to change information to get a cheaper quote. Whereas we see something in the order of 40% where there is some level of manipulation happening, but it isn't an indication of fraud. It could just be a case that the individual is learning more during the insurance buying process, and they've gone away and worked out the true value of their car on their second application versus their first application. It's very, very important that the two categories and the two behaviours are dealt with very differently.
When we actually come to the fraudulent activity, first of all, how can you spot it at that early stage? How can you see the patterns starting to emerge?
A key indicator is the time people are shopping and how much time they're spending more specifically on their insurance application. We have examples of customers who have done upward of 150 different quotations through different channels. So they've been on price comparison websites, they've been into brokers' offices, they've been into call centres, over a sustained period of time doing different quotations on an iterative basis, changing different parts of their application data. And then when they're on quotation number 176 and they've managed to save themselves £500 or £600, that's the point they then try and buy a policy.
The challenge you must have, though, is, as you say, if we're into over 100 different applications, whether it be online, whether it be with brokers, whether it be on the high street, how do you then connect them all up to actually see that there is suspicious behaviour going on? How can you track all of that?
We have a rating hub, essentially, which is a risk selection and pricing hub. So we service insurance companies and we service insurance brokers, and all of our pricing and rating and risk selection is done in one central rating component, which we call IQH. Within that solution, we have a process of ascribing unique identifiers against individuals who are looking to obtain insurance. What we would class as suspicious behaviour, we specifically hone in on that suspicious behaviour to ensure that we're tracking that customer's behaviour in terms of insurance application, and then enabling the insurance industry, either the broker or the insurer, to do something about that. So it's a very, very complicated task, and we've spent a lot of time and a lot of effort and a lot of money investing in the product to make sure that we are tracking the right people at the right point for the right purpose.
And once you have spotted them and you have detected some form of suspicious activity, what happens then? What's the response?
We essentially provide the tools for our customers, insurers or brokers, to be able to act upon that. It's very clear what you can and can't do. The principal objective really of our solution is to make sure that customers are not able to buy policies on the wrong basis, because trapping insurance application at the front end is really, really important, and making sure that that risk and that customer is insured with the right insurance company rather than, going to the wrong insurer. So we express that through a set of rules where the insurance company, if they see specific application behavior which they think is suspicious, they can block the customer, or they can change the process that that customer is going through to take them out of an online environment and process, and then talk to them to understand, are they having a problem trying to insure their car? Are they genuinely struggling, or is it genuine insurance application fraud?
And where does SSP fit into this whole process?
So SSP have been serving the insurance industry, both in the UK and internationally, for 25 years. We were the first into the market with a centralised insurance rating hub, and Verify is a component part of our intelligent quotes hub, which is our rating hub. So we can make the Verify solution available to all of our insurance company customers, new insurance company customers who want to take the solution, and also our broker customers.
How do you get this product Verify that you talked about there to your insurance companies?
We have a very established insurer customer base already. We trade with most of the insurers in the UK market. So as a result of that, we have existing relationships. We can see the data. We can look at application fraud today. We can analyse data, and we can take the problem to the insurer and say, we've spotted this. This is a problem for you, and we have a tool that can sort the problem out for you.
Well, as you say, insurance fraud is getting bigger and bigger and bigger, and it's costing all of us money, so it's great to hear there are ways and means to actually detect insurance fraud. Adrian Coupland from SSP, thank you very much indeed.
Thank you.